Hello, trading folks. I hope you're doing well. And yes, this is my outlook for Euro and GU for the next 6 months, for the next quarter, for the next month, for this week, and probably the weeks to come, and for this day as well. And so this for this market outlook is going to be packed, right? We've ended a significant period, and we are starting a significant period, which is a half year. So I'll be starting from the very high time frames, right? And along the way, as I'll be giving you this outlook, this video is going to be pegged with some gems, of course, for those who are attentive and diligent, and those who listen diligently. And so you better grab your journal and a pen and definitely be writing notes. So without delaying that much time, let's get into it, right? So first of all, the first gem that I would want to give you is that when you are analyzing the higher time frames, in particular the 12 months, the 6 months, and even the 3 months, you're mostly relying on what we call a price-based narrative, right? The reason why you're opening these higher time frame charts, right, is because you want to evaluate something called a draw of liquidity, right? A draw of liquidity. Then number 2, a bias, right? That's what you're trying to evaluate. Of course, draw of liquidity, I know most of you know it, right? It's where price is being drawn towards, right? If I say price is going to that specific level, then that means it's my draw of liquidity, right? That's where you're expecting price to be sent to. Then now when we talk of bias, or also known as directional bias, right? Directional bias is now very important because it is the most possible direction of the next candle that you want to trade, right? And this is directly linked to your execution. So if your bias is a flop, then you're not gonna do anything on the 1 hour or the 15 minutes, or when you think you're gonna get an entry. Your execution is gonna be shit. That's what it's gonna be. So as a trader, you have two main journeys, right? A journey to master your analysis. You need to become a good price reader, right? Or a good price action reader, being able to predict price more accurately, right? Where price is going, and the direction, next possible direction of the next higher time frame candle, right? So that's your first goal as a trader, right? Then your second goal is to become a good executor. Romeo, my mentor, always says that there are people who are actually good at reading price, way more better than him, like way better in reading price, as in they are good analysts. But when it comes to execution, that's where the difference comes in, right? You can be a good price action reader, right? I would love to ask you a question. How many times have you lost a trade, right? Get your SL hit on your smaller time frames, then afterwards, when you just go away from the charts for a moment, you see price then go your way. How many times have you lost and still see price go your way? How many times have you seen this? It's quite a lot, right? Yeah, it's because your execution is a journey you need to master it, and it's going to be the second and last aspect of your trading. Many people rush to execution without even mastering their analysis. Master your analysis first before you even think of executing. Okay, and so let's start here from the 12 months chart with the order flow, which is always the first thing. This is gonna help us understand where the price is going, right? In terms of the order flow, you can see in an overall perspective that price has been rejecting lows and breaking highs, right? You can clearly see that price rejecting lows and breaking highs, and price has also been disrespecting the up close candles, right, and then using them as an inverted PDRA, right? And also again, the gaps in the market that are bullish are being filled and creating higher prices, right? Creating higher prices, and the down close candles being used as support for price, right? I'm not talking about support and resistance. I'm simply talking about logic here, right? Being used as support for price, right? And so the order flow is clearly bearish. Then of course in the retraction, we still see a bearish order flow, but not exactly, right? In this retraction that price made, we have a range bound condition, right? We can see that price primarily created that high and also primarily created this low, right? And what happened afterwards? What happened is that price went on to create substructures in between that high and that low, right? How many substructures? High, low, high, 3 substructures. So price was creating interest from both sides of this market, right? From the buy side, from the sell side, right? And what did price do? It purged, right, the range. If you're seeing a ranging profile, you only expect 2 things. Write this down: a manipulation, right, which is also known as it's also known as a turtle soup, right, or a false breakout, which is also known as a manipulation, right? Turtle soup or manipulation or liquidity sweep, whatever they call it, but that's the first scenario, right, that you would expect if you see a range. And the second scenario is getting a true breakout out of that range. And what are the conditions that tell you that you're gonna get a manipulation or you're gonna get a true breakout? Key levels play an important part, right? Play an important part among other concepts that I won't necessarily talk about right now. But key levels should give you an insight. If you have a range just above a key level like this, then you are most likely to anticipate a manipulation into the key level, then afterwards a reversal or distribution, whatever you want to call it. And so we also had that range bound condition. So ranges are the key to our draw of liquidity, right? If price purges one end, then your interests are now towards the 50% of the range or the opposite end, right? So that means your draw of liquidity is high, right? And excuse me, we also had this high this dealing range, right, from the low to the high. This is a concept that revolves around that price does not move in a straight line. Every time price makes a significant expansion swing, like this one, that is called the dealing range, one of ICT's concepts, then you simply expect price to be drawn towards the equilibrium and preferably the premium key levels, then shifting your draw of liquidity interest towards the opposing high, which is in the direction of the what, of the order flow, which is already bullish, like we evaluated. So this is the long-term draw of liquidity. Like I said, I'm going to be giving you some good stuff in this video. Another important thing about draw of liquidity, right, it's not about just coming up with it, but it's being able to ask yourself, how is price going to reach this particular draw of liquidity, right? That's when short-term draw of liquidity comes in, right? Of course, this is the 12-month chart, and this is the 12-month candle, which isn't exactly closed. But if it closes above this bearish candle that TEDOSUD, this range is low, then it would act as a particular key level for price, right? And this key level would be mostly responsible of sending price towards the draw of liquidity. So it's not about just demarcating your draw of liquidity, but it's understanding how price would be reaching that draw of liquidity, right? And we are also coming from premium key levels, right, which are determined to propel price in the direction of the order flow. Excuse me. So yeah, that's pretty much it. So my draw of liquidity, ladies and gentlemen, it's towards this high. Of course, first towards the 50% of this particular range, then hopefully towards the range high, then even towards my dealing range high, which is way up there. And then in terms of my bias, it's bearish, right, until price reaches the short-term draw of liquidity. Then once price reaches my short-term draw of liquidity, then my directional bias for the next for that particular yearly candle will become bullish. And so that's how it would work. That's how simply it would work. Let's now move on to the 6 month. Wow. And so we have now moved into a new 6 month period, right? And to those who are uninformed, I said I'll be giving you gems throughout this outlook. You must have a good understanding of time frame selection, right? Knowing which time frame to start on at what particular time, right? If we've passed a 6 month period and entering into a new one, then at least you must be starting from the what? From the 6 month time frame, right? In terms of your analysis, you should be starting from there. And the same for when it's a new quarter, you should at least be starting from the quarterly time frame or the 3 months time frame, right? It might seem as if I'm just saying some stuff, but if you stay long enough in the game, you understand what I'm saying. Then at least you will remember, right? We have moved on now to the 6 month time frame. And now what can we see on the 6 month time frame? Of course, the order flow has been quite bearish. Price has been rejecting highs and breaking lows, right? That's what you'd want to see in a bearish market, right? Price only closed once above this candle high. Then what happened? Price rejected, creating lower prices. And price also respecting bearish PD arrays, we had this rejection block right there that was respected, that filled an imbalance, right? What makes key levels high probability is when they are associated with neutralizing liquidity, or let's say filling liquidity or purging liquidity, right? And you can see that order, that rejection block worked perfectly, sending the price down, right? And what you must also know, another gem, is that you can only consider price to be bearish only until it reaches a higher time frame key level. Right? Only until price reaches a higher time frame key level. Then you should start having a shift of order flow in mind, right? As you can see, once price reached this yearly down close candle, which if you refine is still at another down close candle on the 6-month period, and even an FVG right there, right? You can see it yourself. Price then is most likely to shift in order flow, or let's say price is most likely to not care about what, about your fancy order block, your fancy bearish FVG, right? Price won't care about that. So it's always important to have the higher time frame key levels in mind, and understanding that the higher time frames in all their aspects, they'll always be confluential over the lower time frames. Write that down if you didn't get that. Then, so another interesting thing on the 6-month time frame is this range bound condition we've got right there. This is very, very high probable, right? And the range low, of course, the range low plus that turtle soup, right? Price was generating interest even more on the 6-month time frame from that same high and same low I was talking about. And price manipulated one end, and now your interests are towards the 50% and the opposite end, right? And then the range within a range, we have a range as well, another one, right? Right there, which was still manipulated. The 50% was already reached, now looking for the range high to be what, to be simply reached. And so this would act as your draw of liquidity. But an important question is, how is price going to reach this long-term draw of liquidity? You can clearly see that we've recently had a shift in order flow, right? And it's a shift from being bearish to being bullish. Why do I say so? Because in a bullish order flow, you expect the lows, right? Whether they are candle lows or swing lows, you expect them to be rejected and to see the highs being drastically broken like this, right? That's the first thing, and you can see that that already happened. Then another thing is, you want to see the bearish fair value gaps being disrespected brutally, right? Like right there. And of course the bullish ones being respected. Then you want to also see the bullish PDRAs, particularly the down close candles. You want to see them sending price upwards, right? And the up close candles being disrespected and possibly being used as inverted PDRAs. Those are that's the typical framework for probing order flow. And even yes, the broken imbalances, they sometimes can be used as an inverted PD array as well, right? And so if price is going to reach that range high, or if price is going to continue creating higher prices, I need price personally to mitigate a down close candle, right? Or at least fill in this inverse fair value gap. So meaning that my short-term draw of liquidity would firstly be that inverse fair value gap, and then preferably down here, right, to this inverted up close candle, and even much more preferably this down close candle, right, that was behind the liquidity bridge down there. Then that would be more suitable. That would be very suitable. So in terms of my draw of liquidity, I don't want this video to be too long, right? So I'm just gonna give what I can, right? What I'll just do is give what I can, right, in the amount of time that I have, right? I don't have all the time in the world to give you all the explanation as if I owe you anything, right? Because I owe you nothing. And so just appreciate what I can give you, right? And so this would be my first short-term draw of liquidity, and this would be the second one. And again, if you want to deepen your draw of liquidity analysis, is even how is price going to be reaching these short-term draws of liquidity. You can see from the far left we have this typical up close candle that was created in a bearish order flow, right? And so it's important, and it might take part in propelling price towards the short-term draw of liquidity. Then once it's reached, simply you anticipate higher prices. And another important thing for us to be anticipating the movement of price towards that range high is SMT. If you check GU, we have an SMT. I'm not gonna open the GU chart, like I said, I don't have time, right? This if it's not this one, it might be this low, right? It was purged on GU, and here it wasn't, right? So we also have a symmetrical difference which plays a part in causing either higher prices or lower prices, and this would give you conviction to see even much higher prices, right? So that's my analysis for the 6 month. My bias is bearish, right? I'm not planning to sell. And another thing is that you must take along from this video is never buy high, never sell low, right? Only sell high and only buy low, right? So my bias is bearish until the short-term draw of liquidity is reached. That's when you might start to see me buying this on the 6 month, right? So for the next 6 months, I expect price to move down, right? To move down and reach here. That's the first target. Then the second target down here. Then we can now anticipate higher prices. And so that's my expectation for this on euro on the 6 month particularly. Then we move on to the 3 months time frame, right? On the 3 months time frame, we have the same range as our framework, right? This particular range low, range high, purged, and now the order flow is even much more beautiful on the 3 months time frame analysis. You can see that price coming from the higher time frame key level. You can clearly see the shift in order flow. You can see the down close candles creating higher prices, right? This particular down close candles creating higher prices. You can see the bearish fair value gaps being disrespected, right? and of course the bullish ones being respected. Those are very important price action details for probing your order flow. If you take it for granted, that's up to you. If you wanna see it from a more valuable view, then it's gonna be so valuable for you, I guess so. And then you can also see that the lows are being merely broken, right? Like that swing low right there. Price only closed once, then swooshed to the upside, rocketed to the upside. Order flow inevitably what? Bullish. And so if price is going to continue creating higher prices, what do you need price to do? You need price to fill in a gap, right? A bullish gap. You need price to take out a low, candle low or swing low. You need price to mitigate a down close candle, right? Or an inverted up close candle. Those are always your expectations when you're probing order for either. Of course, this is for when you have bullish anticipations, but if you have bearish anticipations, the opposite will be just true as well. And so as you can see here on the 3 months time frame, you can see that we have this particular fair value gap that was broken, right? That would be my first target for price. I would need price to reach here first. Of course, it would be reaching there first before it even goes way down. If price disrespects this tiny broken fair value gap, then we just keep on moving with price until this preferable short-term draw of liquidity is reached. Then higher prices can start to be anticipated. And then how is price possibly going to be reaching right there? We have this rejection block, not rejection as such. We have firstly this, right? We have this order block. It can propel price. Even if you want to refine, you can even use this one, right? And see that price is just recently reached the opening, the low of the order block. It's reached the low of the order block, and from that particular place, that's how you could possibly see price reach the short-term draw of liquidity before price can continue going up to reach the draw of liquidity that exists high. Then even on the 3 months time frame, now since we've reached the 3 months time frame, we also look for something important called quarterly shifts. Every quarter price is gonna make a shift, and we are looking at the past 3 months, and this candle represents the past 3 months, and you can see that this past 3 months went into a key level with an expansion, right? So this is basic market profile knowledge, that if you see an expansion into a key level, right, at a key time as well, like right here, you know, it's the middle of the year, right? That's when price makes huge shifts, right? In July, August, June, that's when market makes huge shifts or huge reversals. You definitely at least expect a retracement, right, before price needs to continue, or simply a reversal. So with that said, only my expectations for the 3 months bias, right, for this next 3 months is my bias is bearish, right? I'm expecting a bearish 3 months candle until at least this inverse fair value gap is reached, or this draw of liquidity way down there is reached as well. Then I can start to have a bullish bias mindset, right? So I'm now calling it off on the what? On the 3 months. Now to move on to the monthly. When I've moved now to this view, monthly, I'm now looking at something even more important called seasonal tendencies, right? We'll look into that after I've already made up my price-based narrative. On the monthly time frame, it's easy to see that price has truly been bullish, right? But like I said, only until price has reached a higher time frame key level, right? And we are in a 3-month order block, right? Which is even a 6-month key level as well, right? You can see that yourself. So that's definitely a higher time frame key level, and you can't keep on anticipating higher prices when prices reached such a higher time frame key level, right? So again, your order flow, yes, it was bullish, right? And it has been bullish, and for it to create higher prices, you need mitigations, right? You need these gaps to be filled. You need lows to be rejected, right? Before price can possibly continue being bullish as such. And so again, another concept that you can put in use right here is the dealing range concept, right? You can clearly see that price, we have this dealing range right there, and at the equilibrium exactly, we have this fair value gap that would act as a what? As a draw of liquidity. Of course, I'll still remain with this one as my draw of liquidity, since it's more near, right? Since it's most likely to be reached as compared to the one that's way down there, right? So my draw of liquidity remains to the downside, and I expect the higher time frames to be the ones to propel price towards my what? My short-term draw of liquidity. Then my monthly bias is bearish, right? My monthly bias is bearish. If we want to refine this, you see that we have this up close candle right here that would act as a premium key level, right? Price could respect this, right, in order to send the price down, right? Price could even go on to purge those equal highs, probably fill in that liquidity before price reaches right there, right? That will be your job, to look for a particular key level, right? But the key level, it's not that serious, right? If you have an understanding of where price is going, then that's more important than anything else. A key level it's not even the hard part. So yeah, and so your monthly bias should be bearish at this particular point. When you have reached a particular key level, then your bias is bearish, at least until price reaches the short term. Then of course we have this old high as well, a higher time frame key level that is also acting as a what? As a short term draw of liquidity. And yeah, you should work with that and frame your trade ideas. Then now moving on to the weekly. Before I move on to the weekly, I wanted to show you something important. Seasonal tendencies, right? I'm not gonna explain much. This is not a private coaching video, right? If you check right there on the Euro seasonal tendency chart, you can clearly see that at the start of July, price has a tendency of creating lower prices, and so that should give you more conviction of getting lower prices, right? Of getting at least a retracement to that particular level, or even way more down, or and then you can expect price to do whatever from that particular point. But after firstly getting the retracement, this is at the higher time frames, and of course that retracement on the lower time frames, it will be a big expansion move, right? Yep. So now the weekly, on the weekly, the weekly is quite beautiful, right? My draw of liquidity still exists to the downside, right? As I still have this inverse fair value gap around, that's where my draw of liquidity remains, right? And the key thing that you and I should be doing on the weekly is refining the higher time frame key level, right? Refining and aligning the higher time frame key level, and we have this particular valid order block right there, right? If this works well, right, then you should be able to frame your draw of liquidity towards right there. You should be able to frame trade ideas towards right there, right? And possibly, right, possibly this working as a valid candle range, right? Because another intricacy of CRT is that potential CRTs are formed around key levels, right? Because they're like ranges, right? If a range is formed just below a key level, then you would expect a manipulation into that particular key level. Then that's when you'd possibly be able to frame your trade ideas. And so on the weekly, my weekly bias is still bearish, right? I'm still looking to sell, right? If I get the proper execution criteria. Remember, analysis, like I said, it's different from execution. It's not the same thing, right? If my analysis is just saying that my draw of liquidity stores right there, it doesn't mean that I'm just gonna go and sell, right? You need to master your execution. It's not something I'm teaching in this video, but you need to master it, right? I think what you must find more insightful in this video, it's about the analysis, right? The intricacies, the detailing. I don't know what the pronunciation is, but you're looking into the details, right? Into the detailing, right? Then you should use that then to move on with that to your execution that you still have to master regardless. And so that's pretty much it on euro, and my time is almost up. It's actually up, my time. And so moving on to the daily, if your weekly bias is bearish, then you should expect to see higher prices first at the opening price, right? You should expect Monday and Tuesday to create higher prices. Then from Tuesday, that's when you can possibly expect the high or low of the week to be formed, right? In this case, you can see the high of the week being formed. Then that's when you can frame your sell trade ideas going down. So that's pretty much it. Like I said, this video is not about execution. It's about analysis. It's about giving you an outlook, right, for direction. Some people, they may even just be lost of where price is going. And so I think I've made things clear from the 6-month chart, the 12-month chart, the 3-month chart of what you should be expecting price to do in the next 6 months, right? And ongoing. And another important thing is, yeah, I think that's it. Yeah, I remember what I wanted to tell you. If you're not in my group, look for my bio on Twitter. which is MSMFX. You just search it up, MSMFX. If it's not MSMFX, then it's MSM Forex, right? You just search that up, you get my profile. Then in my bio, you will see the link to my group, right? And when you get into that group, the only admin in that group is me, right? That's where you can get my contact if you want to contact me, right? And I offer 3 services, right? Yes, I do offer coaching. And if you're interested, just do what I said, right? You just search up my Twitter, and you reach me eventually. That's what I can say. And if you found this insightful, you found this valuable, please just leave a like, leave a subscribe, and share, and grow this channel. If I do not see activity in this channel, I won't keep on posting this good stuff like this, right? So I need activity in the comment section. I need feedback. I simply need activity, right? It will be like an appreciation. It will be like a motivation for me as well to just keep on posting. So with that said, cheers, ladies and gentlemen, until we meet next time.